What are some of the most common misconceptions about Bitcoin that you see from potential investors or just from market participants in general, even if they're outside the crypto asset space?
I think one of the most misconceived ideas is that Bitcoin is volatile. Because people who say Bitcoin is volatile, they're strictly looking at Bitcoin from a US dollar denominated price standpoint. They're not really game theorying out the entire reason why Bitcoin exists in the first place and the actors and participants in Bitcoin. It's real people who are volatile, people who buy and sell that create that volatility. And so when you have an asset like Bitcoin that has a low float, meaning most Bitcoin holders are also known as hodlers. It's just kind of a funny term in the space because they deal with the volatility because they understand what they own and they hold through it, such as myself. But because it has such a low tradable float, it's very easy for that price to go up and down, 5% on any given day or more. And so I think what people need to realize is that when you have an asset with a market cap, right now it's about $1.25 trillion. It's a teeny speck in terms of the total addressable market, and it has a really low float. You're going to have people entering in it for what I call NGU, right? Number go up. And so these people are going to create volatility because they don't actually know or realize or understand why they own this thing, or perhaps they're just trading it, which is fine. I've traded Bitcoin before too. But that creates volatility, which is a misconception because people think Bitcoin is, in that case, a speculative asset, or there's a lot of uncertainty around Bitcoin, when in actuality, Bitcoin is the single best self-regulated protocol that has ever been created. We can anticipate and know to the exact T how many Bitcoin is going to be created because of its protocol and the fact that every 10 minutes, 3.125 new Bitcoin get mined and created and into the ecosystem. We can calculate with precision exactly when the last Bitcoin will be created. That's not volatility. That's certainty. That gives us an ability to project out into the future and predict what the inflation rate of Bitcoin is going to be. In fact, the dollar, in my opinion, is way more volatile than Bitcoin because of what happened in 2020, for example, when roughly 30 to 40% of all dollars in circulation were created with the snap of a finger during the COVID pandemic, which eventually led to the debasement of the dollar even further, where a dollar is worth like 95% less than when it was created in 1913. I just find it kind of fascinating that people view volatility as a negative thing, and when they're only looking at it from like a US dollar denominated price standpoint, and they're not looking underneath the hood and looking at how beautifully designed this protocol was created. It's self-regulating protocol. Even the fee mechanism of Bitcoin is a self-regulating mechanism. Even the block size limit is a self-regulating mechanism. Even the Bitcoin time to create a block is a self-regulating mechanism. And I know there's a lot of nuance there, and I don't want to get too much into the technical weeds, but all these things that allow the protocol to exist and function and flourish and run self-regulate it so that you can have certainty in other things other than the US dollar denominated price.